Welcome. In this video, Zbcn versus XCN, which is better, we are going to analyze this. Don't forget to subscribe, like, and please watch to the end to understand. But first, let's analyze Zbcn.
The rising wedge formation is one of the commonly encountered and highly significant price patterns in technical analysis. This pattern typically represents a structure where the price moves upward within a narrowing range, oscillating between specific support and resistance levels. In the case being examined, it is observed that the price has bounced off the lower boundary of this rising wedge formation and is currently moving toward the upper boundary. This indicates that buying pressure among market participants remains strong and that the upward potential of the price is still intact. The lower boundary of the formation, having served as a reliable support area multiple times in the past, reinforces investor confidence and the structural soundness of the technical setup whenever a bounce occurs from this level. Although the movements within the wedge signal a narrowing pattern, the ongoing price action reveals that the upward trend remains robust. Rising wedge patterns are often signs of market indecision. However, the fact that the price continues to move upward steadily within the formation, especially after a strong bounce from the most recent low and a renewed push toward the upper boundary, suggests that market sentiment is still positive and that a bullish breakout is becoming increasingly likely. If such a breakout occurs, technical analysis dictates that the target price levels are measured by projecting the wedge's height upward, implying a significant potential for price appreciation. The movement toward the upper boundary of the formation indicates that the price is nearing a critical resistance zone. This area has previously triggered selling pressure and led to downward corrections, making the price behavior around it particularly important. However, the current outlook shows a strong push by the price to test this band, with increased buying activity. Notably, rising volume and positive momentum indicators further strengthen the possibility of a breakout above this resistance. If the price manages to break above this upper boundary with strong volume, it could signify not just a short-term rally, but also the beginning of a longer-term upward trend. When we examine the price behavior within the wedge, we see that the structure is progressing in a relatively symmetrical manner, with similar timing between peaks and troughs. This symmetry is another key factor enhancing the technical validity of the formation. Technically, it is expected that a breakout point will eventually be reached in this narrowing pattern, and the direction of that breakout is typically shaped by the price's most recent movements within the formation. Currently, the bounce from the lower boundary and the momentum toward the upper boundary increase the likelihood of an upward breakout. From an investor psychology standpoint, these types of formations are also significant. A price structure progressing within a rising wedge can gradually instill increasing confidence among investors. The repeated bounces from the lower boundary and the formation of higher lows each time suggest that market participants are becoming more comfortable with higher price levels and are more willing to enter buy positions at these points. This behavior strongly supports the notion that the price is maintaining a healthy upward trajectory within the formation. Moreover, analyzing trading volume within such formations holds considerable importance. If the price is moving toward the upper boundary accompanied by increasing volume, this is interpreted as a strong signal in favor of a breakout. Conversely, decreasing volume may indicate indecision or a wait-and-see approach before the breakout. In the current scenario, the increase in trading volume alongside the upward movement suggests growing market expectations for a breakout and shows that new buyers are entering the market. The price movement within the formation can also be interpreted as a consolidation phase. Consolidation periods occur when investors experience uncertainty before entering new positions and often serve as digestion periods for prior moves. However, when this consolidation happens within a narrowing structure like a rising wedge, it gains even more significance from a technical analysis standpoint. As the end of the formation approaches, the market is typically forced to choose a direction, and this usually results in a strong move. The current technical outlook provides strong signals that this move may be upward. Additionally, past price movements can serve as a reference when examining similar wedge formations. Historically, upward breakouts from such patterns have been supported by large volumes and sudden price surges. This reflects investor confidence in the technical setup and the willingness to enter positions after the anticipated breakout. If the price successfully breaks out to the upside, the initial target would typically be the height of the formation. If this target is surpassed, it could lead to a technical price discovery process and possibly new all-time highs. A bullish breakout from this formation would not only signal short-term gains, but also provide key insights into a potential trend reversal or the beginning of a new bullish cycle. The structural integrity of the pattern, the presence of volume-supported moves, and the formation of positive market sentiment all indicate that if the process concludes successfully, resistance levels could quickly be overcome. This would present a scenario with both reassuring signals and significant potential for investors. In conclusion, the steady progress of the price within the rising wedge formation confirms the pattern's technical validity and shows that the market is taking it seriously. The strong bounce from the lower boundary, followed by movement toward the upper boundary, provides a clear signal that the formation is nearing a breakout. If this breakout occurs to the upside, not only will technical analysis targets come into play, but market sentiment is also likely to shift in a more positive direction, drawing in more investors. This could lead to significantly higher price levels, once again highlighting the powerful role of the rising wedge in technical analysis. However, we cannot rely on wedge formations alone for analysis. Let's take a look at the other metrics as well. Stay tuned.
One of the frequently used methods in technical analysis in the cryptocurrency markets is the Elliott wave theory, which allows market movements to be evaluated within the framework of wave formations. According to this theory, price movements in the markets progress in specific wave sequences, each with its own structure, character, and mathematical ratio. These wave patterns are especially more visible in short-term analyses and can provide valuable insights to investors. In the context of the short-term Elliott wave structure examined here, it is currently assessed that the market is in the third wave formation. According to Elliott theory, the third wave is typically the longest and strongest wave. This wave is the phase where the majority of market participants join the trend and prices gain significant momentum. The first wave usually marks the beginning of a rise or decline and is formed with limited participation. The second wave that follows is a correction. Investors take profits, but this correction never exceeds the starting point of the first wave. The third wave is the most noteworthy from a technical analysis perspective because it is where prices move most aggressively. In this context, technical analysts place strong emphasis on specific Fibonacci ratios during the third wave. In particular, the 1.618 and 2.272 levels stand out as the minimum target points expected for the third wave to reach. These 1.618 and 2.272 ratios are Fibonacci extension levels and are measured relative to the length of the first wave. These levels are used to gauge the momentum and potential strength of the price movement. Based on the distance between the beginning and end of the first wave, it is expected that the third wave will extend at least 1.618 times that length. In this regard, the third wave reaching the 1.618 level is not only expected, but is also considered an indicator of a healthy Elliott structure. However, the third wave often does not stop at 1.618. With strong volume, market momentum, and support from technical indicators, this wave can extend as far as the 2.272 level. These ratios are critically important in technical analysis and are treated with great care in target price calculations. The strong upward momentum of the third wave is not merely a theoretical expectation, but a situation frequently observed in practice. Many professional investors and analysts increase their long positions during the third wave, as this phase is where the trend moves most reliably and rapidly. Additionally, technical indicators typically support this process. According to Elliott theory, the third wave should never be the shortest wave. Based on this rule, it is essential for the third wave to be longer than the first wave, and often it is the longest for the structure to remain valid. Therefore, if the third wave falls short of the 1.618 Fibonacci extension level, it is generally considered weak in terms of technical structure. Surpassing this level provides stronger signals for investors and confirms that the market is in a strong trend. For short-term positions in particular, these levels are accepted as targets, and investors shape their positions accordingly. Furthermore, the third wave reaching the 2.272 Fibonacci level indicates that market sentiment is highly positive and the uptrend is gaining momentum. Such movement reflects not only speculative behavior, but also a structurally supported rally. In this scenario, investors anticipate a new price peak and a healthier correction phase for the fourth wave. This maintains the integrity of the overall structure from a technical standpoint and builds investor confidence. It is also possible for the third wave to exceed the 2.272 level. However, in this case, the fifth wave is more likely to be shorter because under Elliott theory, only one of the three motive waves can be the longest. In short-term analyses, a strong advance of the third wave towards the 1.618 and 2.272 levels also has psychological effects on the market. Investors, even if a correction follows such price advances, tend to maintain their bullish strategies, believing that the overall structure will continue upward. This increases liquidity and trading volume during the third wave. Moreover, the widespread attention these aggressive moves receive on social media, analysis platforms, and news sources helps attract more investors into the market, further contributing to the extension of the third wave. Elliott theory is not just a price action-based analysis method, but also helps understand the internal dynamics of the market and participant psychology. Therefore, a strong advance of the third wave towards the 1.618 and 2.272 levels indicates that the fundamental dynamics of the market are also positive and that investor expectations are aligned with a bullish outlook. If this technical analysis expectation is realized, investors will more comfortably accept the correction phase of the fourth wave and find new buying opportunities for the fifth wave. In conclusion, in a short-term Elliott structure, the third wave reaching these two core Fibonacci levels is not merely a possibility, but an essential component of a healthy technical formation. This creates confidence for investors and allows them to shape their strategies around these levels.
Zbcn coin and XCN coin represent two distinct projects making waves in the cryptocurrency space. While each asset has its own unique use cases, target audiences, and technological underpinnings, they also share common features that attract investor interest. Comparing these two projects is meaningful not only in terms of technical and fundamental analysis, but also when assessing long-term potential. XCN coin is particularly positioned in the DeFi and decentralized governance sectors. It serves governance functions within the Onyx protocol ecosystem and plays a central role in group lending and borrowing processes. In contrast, Zbcn coin is a younger project that has shown rapid growth in community support, recent roadmap updates, exchange listings, and technology adoption. One of Zbcn's most notable qualities is its ability to attract strong user interest at a low market cap and actively engage on social media and within its community, a trait that often indicates substantial early-stage potential. From a technical analysis perspective, XCN coin has previously executed a notable rally, reaching an all-time high around $0.18. This peak coincided with peak adoption and increased activity within the Onyx protocol's DeFi ecosystem. During that period, both investor interest and volume surged, fueling dramatic price increases. However, over time, broader market downturns, regulatory pressures, and waning interest led to a significant pullback in XCN's price. Currently trading between $0.017 and $0.019, XCN has dropped about 90% from its ATH, indicating considerable upside potential if a new uptrend begins. In contrast, Zbcn coin is still in its early stages. Although its market cap remains small, it has started to capture investor attention through exchange listings, roadmap announcements, and active community engagement. For early-stage investors, Zbcn provides a high-risk, high-reward proposition. While its low market cap allows for greater upside, its ecosystem development is still nascent. Potential milestones such as listings on major exchanges, institutional partnerships, and integrated products could trigger significant price jumps, mirroring XCN's past performance during bullish cycles. From a long-term investment strategy viewpoint, mature projects like XCN coin, which have already achieved ATHs, offer compelling re-entry opportunities. In technical analysis, old highs often act as magnets. A return to $0.18 would represent roughly a 10x gain from current levels. For Zbcn coin, an ATH is yet to be established, meaning investors could witness the formation of new record highs. Zbcn is technically and fundamentally in a formative stage, and strategic early investment could yield substantial returns as its ecosystem matures. Community dynamics also favor Zbcn. The project has recently gained meaningful momentum on social media. Posts, content updates, and direct communication between developers and the community highlight its organic growth trajectory. In crypto, community power is often the bedrock of a project's success, not just its technology. If Zbcn can maintain its momentum, it has a strong chance of scaling its user base and triggering major price breakthroughs in the months ahead. In conclusion, comparing XCN coin and Zbcn coin illustrates how they cater to different investor approaches within the crypto market.
XCN coin represents a proven project with historical rallies, serving risk-conscious investors as a steadier option. Zbcn coin, on the other hand, offers upside potential and excitement to early-stage risk-tolerant newcomers. Considering Zbcn's current price and XCN's previous peak of $0.18, Zbcn could theoretically see similar 10x growth if it emulates XCN's trajectory. While such scenarios remain speculative, the high volatility and return potential in crypto mean that strategic, well-timed investments can yield significant gains. Tell us in the comments, which coin do you favor more?
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.